All right, you should be able to see the screen. Good to see everybody. And sound should be fine. Just let me know. We'll get started. Welcome to the session. Markets are moving. Lots to go over. My name is Sam. We've been delivering these sessions for many years. And I am always here with FX Street to focus on how the markets really work. And there should be sound. Sound should be working fine. All good? Okay. Yeah. So it looks like some people don't have sound. Everybody here okay? Just want to make sure. It's happened before where you talk and no one can hear you. Yep, everything looks all right on my end. Okay. Great. So what we focus on here, as always, is supply and demand. In other words, looking at any and all markets, stocks, futures, forex, options. Let's see. Advise your sound in the, okay, but looks like sound is okay, right? All right, someone just let me know if it's not, but otherwise I'll keep going. Thanks, Vicki. All right, and Vicki is a key person in making all these events happen. So thanks, Vicki, for all that, connecting all of us. And here we go. So when it comes to the financial markets, stocks, futures, forex, options, any market, any time frame, day trading, swing trading, longer term position trading, investing, whatever you call it, it all comes down to two questions. Where's price going to turn and where's it going to go? To answer those two questions, we focus on how the markets really work. Focus on what's real, not what we feel. Right? We know that market prices, right, when they are falling, once they reach a price level where demand is equal to supply, they will stop falling. If they reach a price level where demand is greater than supply, they will stop falling and turn higher because of that competition to buy at the demand level. Once they reach a price level where supply exceeds demand, they will stop rallying and turn lower. Anybody disagree with that? Does everybody agree with that? Does that make sense? And if you have another thought on that, certainly let me know. And all I'm describing is not my strategy or anybody's strategies, just that's how the market really works. Right? So if we're all on the same page with that, then isn't the next step to say, what does that picture look like on a price chart? That's what we focus on here. And the more that you can have just a razor sharp focus on that, that's ideal. Now we can go through. I've got all the markets here. We've got plenty of opportunities to go over. So whatever market you want to go over, you can just also let me know. I'm happy to go to any market you want. We can look at stocks, futures, forex, options, forex futures, spot forex. Doesn't matter to me. The dollar. Or I can run through my list and start to put the whole puzzle together for you. Gold, yes, and also too, we've got some of you have seen before. I've got the automated strategy up here. So we've got this on. I've got the forex list here, but we can also go to stocks and futures and ETFs and all that. Day trading, swing trading, longer term position trading, you name it. It's all here. So we've got a nice menu, and you can tell me what you want off that menu, and we will go over it. All right, let's look at gold. Mark wants to look at gold. No problem. So gold has been a market that we've stayed away from for a little while until recently. The last few days, we have really, and here's why. Here's why we stayed, here's the daily chart of gold. We've stayed away from doing much in gold inside of here, okay? Let me share something else with you real quick since we have the time. That. So this is from. So I deliver sessions every morning for people, and this is a screenshot from the session I delivered this morning. Yesterday, the Nasdaq came into our demand zone and rallied back up to where all this price action is. I want to explain why. Coming into today, the automated supply and demand screener that I have showed us that we have likely have some demand down here and supply up here in the S&P. What I want to share with you is this picture here. So when we say demand or willing buyers, it's this group, this area down here. Supply, willing sellers, this area up here. In the middle, we have relative balance, or probably better said, a lack of significant supply and demand. We don't have big supply demand imbalances in the middle here, which is why we get so much trading here. Does that make sense? Which is why you get so much trading here. But notice as price gets away from this middle, this area, and gets close to our supply or demand, or yesterday down into our demand, that's this area here. This competition to buy, it's like musical chairs, right? It is musical chairs. This competition to buy forces price back up to the middle. Does that make sense? Does everybody understand that? But understand that the picture of the chart, which represents filled orders, is very different. It's opposite of the picture I'm showing you on the left here. This represents unfilled orders. Okay? Unfilled demand and supply cause prices to turn. Filled orders in the middle facilitate price movement. Is everybody pretty clear on that? Now let's go back to the charts. And you can see why in gold for a while, when price was in here, that suggested there's a lot of filled orders here. If there was a big supply-demand imbalance inside this area, you wouldn't get all this trading. But a few days ago, when price finally broke out through this area and went up to this supply zone, that's when we got very interested in gold. Okay? And with that, we then, here we go. Let me go back here. So all that's happened since then is gold has moved from our demand zone down here, and I'll come back to this in a minute, to our supply zone that we see here on the 30-minute chart. It's kind of moving back up there, and that's it. We had a little 5-minute level yesterday. Some of the members, one of the members actually talked a little bit ago, said they took it, but anyway. So we still have another demand zone sitting down here. In fact, let's just stick to the fresh levels for a moment. So this level's not fresh anymore, meaning we've had a pullback, so some of the demand or buyers in this level have been filled. So to keep it higher probability, we want to focus on the 1773. Okay. Sam, we'll go there shortly. So we want to focus on the 1773 to keep it higher probability. If we want to go higher probability than that, we go to the larger time frame, and I believe that is going to be found on the 60-minute. And what a bunch of members in our group are doing is waiting for the 1745. Okay, so the two levels I just showed you are up in here. They're fine, and you can see that first one worked, right? The one I just showed you. But you know, they're both inside of all this. Okay. So if you want to keep it high probability on the buy side, make sure price is far enough away from that larger time frame daily supply zone. You might want to focus on the 1745. Make sense? And then you have another level sitting just below it. Having said that, you might be saying, well, why do you still have the 1755 up here? Well, because price keeps touching that level and turning higher. In fact, it rallies strong off that area. That suggests that there's still quite a bit of demand in that area. Okay? All right, let's keep going. Yeah, watch. So some was acting as your entry point. Yeah, so I'm assuming that people have kind of been to these sessions or watched the videos and understand the rules. Yeah, we have a very simple set of rules that help us understand how to enter and exit positions at key supply and demand levels. And these supply and demand levels that we focus on here, remember, there's supply and demand all over the place in every market. Otherwise, you wouldn't get any trades or any trading. What we're focused on is where is the big smart money getting in and getting out? Where are banks and financial institutions buying and selling so that we can buy and sell there also? That's what we attempt to do with the strategy, all around, again, supply and demand. Make sense? We create the zone. I created, years ago, there was just, you had support and resistance lines on a chart. When I saw that, I said, okay, that's not really realistic to me. So I created the zone, the demand zone and the supply zone, the buy zone or the sell zone, to give ourselves the best chance in the trade, right? And even with that, not every trade is going to work out. So it's all about focusing on how the markets really work and putting a set of rules around that helps us be successful. Okay, on the supply side, so now we're coming back up to this area. Now we've been here before. The reason why the box is green is because the level worked out already. We have a coding system, color coding system. And then remember, above this, that price in gold will be back into this area right here. See that? So you have a couple levels sitting on top of each other there. Okay? And that is gold. So I think someone was looking for the Nasdaq. All right, here's the Nasdaq, and with the Nasdaq, I believe let's probably best to go down to our 15-minute chart. You'll see all of this wide and whippy price action in the middle. Now before we go here though, so there's where our fresh levels are. Okay, but if we look at the Qs, which is the ETF for the Nasdaq, we can see that yesterday we came into our demand zone here. That's the one I showed you a few minutes ago. So because of that, we need to go out of this area now to get to the fresh levels. Does that make sense? So to do that, we come to this the Nasdaq futures here, and on this time frame, we happen to see where those fresh levels are. So 96.94 on the demand side, 10.257 on the supply side. And again, we want to stay away from this area in the middle. The presence of all this trading activity, okay, that suggests a lot of orders in here are filled. Filled orders facilitate price movement. Unfilled orders cause prices to turn. All right, that's the Nasdaq. And again, any other markets you want to look at, just let me know. We can go to the dollar next. So price over the last little while, I guess specifically over the last hour, yeah, we can go to the Russell soon. So price over the last hour came down to this demand zone. The reason why there's a circle there and not a box is because the time of day that level was created is not ideal. In the equity index markets, if this were an equity index market or a stock, we'd say, not a stock, but equity index market, we would say that's an overnight level, but not necessarily in the FX markets. So this level was created in kind of an off hours time for equities, right? Maybe between two key sessions, right? Yeah, Europe, Asia, and US. Nevertheless, it's working out fine. But so now we have some secondary evidence that demand exceeds supply in this area. We're getting a nice little bounce. So if the market comes down here again, we'd expect prices to turn higher. Okay, simply because we didn't trade deep into that level. On the supply side in the dollar, we're going to need to go to the 4-hour chart. Okay, This level already worked out for us, but we'd expect prices to turn up there again. Anyway, there's room. There is a little 5-minute level I want to share with you. Let me see if I can find it for you here. No, we had it. Let me just scroll back and get it. There it is. So here's where we're at, 97.50. This looks far away, but this is only a 5-minute chart. Okay, so 98 to 98.15, you have two small time frame levels on top of each other there. And keep in mind too, one thing I want to point out, because a lot of people look at this and say, wow, this looks easy, but remember, just the picture of what this looks like, you may say, wow, if you just find this picture every time, great. But you know, you look at that picture and you look right here. Here's two identical looking supply levels. They don't work, right? So it's not just the levels, it's the location. It's always structure, location. And again, we have rules around that, but just want to make sure you're aware of that. Great opportunities today with price in the middle. I mean, with the dollar down here, yeah, we've got stuff in the euro and everything else, but it just turned there. Had we started this session about 30 minutes ago or 30 minutes earlier, we probably would have had that. But let's keep going here. So let's keep going to let's go to Aussie dollar. And hopefully this is helpful. I'm trying to cover as many markets as I can, and at the same time try to explain as much as I can to help you understand this. Yeah, Jordan, good question there. So you can always I've got all there's a bunch of videos. But if you wanted a deeper look at this stuff, and you can always email me if you want. There's my email address. Okay. So let's keep going. Aussie dollar. Let's go to the 4-hour chart. See, a lot of this stuff is in the middle right now. So there's the Aussie dollar. That's not going to help us because we need really fresh levels here. Let's go back to the dollar for a minute. Here's something we can do. So we've got this 60-minute demand zone. That 30 minutes a little bit low. Let me go to the euro. Let's go to the 4-hour chart of the euro. So again, here's the challenge. We're kind of just sitting in the middle, right? Sitting right in the middle. Yeah, Gary, I mean, trend, trend is fine, and I know it's the backbone of just about everybody's strategy out there, and it's like, but that's not how markets work. It's wholesale prices, retail prices, demand, supply. Trend is what happens in the middle. When prices start moving from demand to supply, people call that an uptrend. When prices move from supply to demand, people call that a downtrend. The problem is people wait for prices to turn because they want that confirmation, and then it's too late. That's high risk, low reward, and low probability trading. Let's take a look at the Canadian dollar, and let's go to the daily first. I'm sorry, let's go to looking at my notes here. Oh, there's the daily. So you can see we might have some opportunity coming up shortly with the Canadian dollar, right? Supply zone with a lot of novice space in the middle, okay? And from there, let's go down to smaller time frames to see if we have something we can, take advantage of. So we look at the 60-minute. Okay, that demand zone. That was one of our. Here we go. It's another demand zone. Looking for. I was sure we had a supply zone up here. Hang on a second. Let's go back to the 60. Hmm. I thought we had that. Okay, I guess we don't. So, but either way, we could go off the daily here. 137.40. That's 137.40. We're getting there. We're not there yet. Okay. Yeah, Sam. We certainly use both. More of the dollar, and then of course all the inverse markets. If I want to see opportunity really quick, I would just come over to the automated tool here, and we can just click through. And this kind of tells you what's coming up, where the levels are at. So there's the pound yen. Let's go to the Aussie dollar. This level already hit, so it works, but that one didn't yet. Go here. Let's go to some of the majors, though, or some of the bigger ones. Let's check out euro yen. See if we're gonna get anything close. That one hit already. Here we go. Euro USD. So that's just a 5-minute chart. I don't think you want to sit here and do a lot of day trading, but oh, I see what's going on here. Hang on a second. Okay. But let me change these time frames for a minute, and we can get everyone up to speed here. Okay, there's that. And then let me just make this a 60-minute chart. Okay. This will really help speed up the analysis. So that level, a lot of the good stuff is hit already, and we're kind of back in the middle. Let's go to the yen. Swiss, hang on a second. There's one, but again, that's just a little day trade opportunity. We'll let's leave that one alone right now. Oh, here we go. Okay, these just updated. So we do have some demand below on the 60-minute chart. That's quite a ways down. Oh, it's not that far down. It's only a 60-minute chart. So we'll come back to that one. The New Zealand dollar is already worked out off this level, but we're up here again. So, you know, the odds are still that these are likely to get moving. I'm looking for one against. This one worked out already. So hang on a second. What about this 60-minute up here, though? That one doesn't look bad. So 124. I'm trying to look for ones, fresh ones. Again, there's plenty on the 15-minute. If I put this on a 5, 10, 15-minute, you're getting opportunities, a lot of opportunities. But we'll try to focus on a little bit bigger time frame. So this area up here, I mean, these all look. I mean, I don't just pick and choose. I mean, if it's on here, it qualifies. Okay, and there are other markets too we can look at. We can certainly go to the futures. So it's telling me that there's a demand zone in the Swiss here and here. That supply zone looks really good up here. So let's see. So that's about 105.98. Again, 105.98 up there is really where the meat of that level is. We go to BP for a minute. So this level already met entry, but that level did not. That's on a pretty small time frame. This one already met entry, so we wouldn't obviously want to enter that again. We only want to take the first pullback. Okay. Looks like the S&P is moving. See how the S&P is just bouncing around in this range? It's because there's a lack of supply and demand to, there's nothing to stop that from happening. That's why you're seeing kind of the S&P whip around here in a fairly big range. And it comes down to, actually back to, I believe you'll see it here. Yeah. See that? So there's the S&P. And again, supply above, demand below. That's why you're seeing, volatility in the middle. And again, we don't really want to do much in the middle here, right? When I go back over here, right? Prices in the middle, that's where people lose money. And we don't want to do that. So we need to be very careful. And we want to know where our supply and demand areas are. Well, we equally want to know when prices in the middle. And we want to be, be ready, but you don't want to take any action in the middle. All right, let's go back to our white background. I think that's easier and clearer for people to see. Yeah, location, Gary, that's all built into those. The automated stuff, it's built into that. But I think you might be asking, like, we're on the Canadian here. So given on the daily chart, and I'm specifically answering your location question. So this area here and that area down here would represent this and that. So because of that, we can go to smaller time frames and look for supply zones up here, demand zones in this general area. But when prices in this middle stuff, where we have the majority of trading activity, you're going to get little supply demand zones on certain time frames, but it's not stuff that we want to take. Sure, we can go to YM, not a problem. So someone's asking for the Dow. Okay. And when we look at the 60-minute chart, and these are all levels, from the morning sessions that I do, but you can see kind of bigger picture where those key levels are. These are gray boxes because they're in the middle. Okay? Yellow boxes are outside of the middle. Gray boxes are in the middle. Doesn't mean that the trade can't work. Obviously, if we didn't think it could work, we wouldn't be giving it to you. But just understand it's a little bit lower probability being in or near the middle. We don't want to take anything that's like completely in the middle, but inside that middle zone, right? That novice space zone. So one thing that people do inside the program is if they take a trade like this, a short up here, for example, in whatever market this is, they would, often reduce the risks. So whatever your risk is, maybe you reduce it to a position size that equates to half the risk. Right? Lower probability, lower risk. Higher probability, higher risk. What I mean is, that kind of came out wrong. What I mean is if you have a very high probability opportunity, you should be, in theory, more comfortable taking on, more risk than a level like this. Does that make sense? Okay. And then also in the Dow, let me just make sure we have all the levels covered here. Oh, if we go to this chart right here, let's go up to the, you can see in the bigger picture, the Dow's kind of right in the middle. We hit those key levels yesterday, right? Like we have this one. Well, we took it off the chart because it hit, but so we just need to get out of this area. Either move up a little bit higher into supply or way down to demand. You might be looking at this level over here. Worked out great, but we wouldn't take it again. There's an example of a gray box, one that's kind of in the middle a little bit, that's worked out fine. So again, they can work. I just wouldn't take on full risk. Yeah, why don't we go to oil and do that? So I see you want to take a look at oil. Let's go to oil, and we will do that. Gaps represent pretty big supply-demand imbalances. Now, the level or zone that you want to enter on, right, doesn't necessarily with a gap doesn't mean, here's what I'm trying to say. The origin of a gap is not always where you want to get in. Often, like this is a great example. Let's look at oil. So for a long time now, even in these sessions here, our FX Street sessions, remember in oil, we've been focused on, watch, these supply zones up here, right? Remember starting around 41 or 42? But the gap is actually just a touch before it. So recently, price turned at the gap, but the key supply level that we're focused on is just above that, 41.85. Sitting below this area, inside of this novice space, we have some supply here. Okay, 39.90 up to 40.60. That's okay, Sam. It can go back up there, and all you'd be getting offered is possibly a higher probability shorting opportunity, right? Okay. And on the buy side, yeah, you're looking much lower. Not a whole lot to do in oil on the buy side until we get much lower. We had a couple good levels inside this area, but prices are moving back to those. So again, we'd wait till the two reasons why on the buy side it's probably a good idea to wait for price to come down. Number one, that's where price is most likely to turn higher on the probability side. Number two, even if there was a demand zone close to current price, you don't really have much of a profit zone, right? So why would we buy? Okay. Sam, yeah, if you don't mind, just resend, but you should, that should work. Oh, no, it's the email I put up in here. I do, yeah, I do check the TSS email, just not as much, I'm sorry. Yeah. There you go. I should check that more. Sorry about that. It's a newer email, so here. Okay, so let's keep going. And so that's, I think, that's oil. Any other markets anyone wants to look at? Otherwise, I could just kind of keep going through my list. And let's take a look. Okay, go. Sure, no problem. I'll be happy to get back to you. The dollar yen is sitting in one of these gray box supply zones, so it's stalling out here, but this is not a great area given its location in the middle. That's why it's a gray box. But we want to focus on this upper level, this 108.28. If the yen does get up here, more likely to turn lower than this area in the middle, but we'd also want to watch for the equity index markets to be down into one of those supplies demand zones that's not too far below. And then we get that inverse opportunity. Let me take you to the futures also. You'll see, not that one. Yeah, so we're looking at these areas, but the other reason too is this 93.30 supply above. Now we're looking at the yen futures. Okay, so watch out for that. Pound dollar, sure, we can take a look. So let's take a look here. So we've got our so after hitting our supply zone, and we have to keep the dollar in the back of our mind because we looked at the dollar for a while already. We do have some other supply zones above. Not a great location, but we already have some secondary evidence with this one that there's probably quite a bit of supply up here, 124.67. And this one has a nice initial profit zone. This one looks like it's offering at least 4 to 1, if not more. Right? I mean, the chart's offering more, but and that means down, possibly down to the 123 or lower. Okay. Most of these that we've gone over, look, the charts look like they're offering at least 3 to 1. Okay. Yeah, no worries. I don't think we looked at the dollar Swiss yet. Go back here. And let's take a look at dollar Swiss. So we were looking at this one a few minutes ago. So we had some supply there. Yeah, I remember this one down here. So in dollar Swiss, looking at the hourly chart, again, this is the automated tools. So a little bit different workspace, but 94.57 on the demand side. And then this little 15-minute supply zone, it's 9,500 right there. Okay, that's dollar Swiss. Yeah, natural gas, no problem. So that'll be right here. And in natural gas, I believe we just hit something. Let's see, 60.5, yeah. So 60-minute chart, we barely came into this ugly kind of in the middle level, but again, it did qualify. That's why we have it. So if prices come back up to this area, we would expect another turn lower, given that prices didn't go too deep into the level. That level's too far. Yeah, we don't really have a lot else in natural gas for us here. I mean, close to current price. But you see all this trading, see how prices like right in the middle of all this trading activity? We shouldn't expect to find anything high quality in here, right? Right? And if we did, well, for example, let me show you this. See that? There's a nice looking level right there. There's a nice looking level right here, but we don't want to take those. I would never give these to you. They're right in the middle. You know, they're probably not gonna work. Price gapped right through this. Right? Price went right up through that. Price went up through that. They're in the middle. So that's why I don't give them to you. Remember, if we go back here for a minute, just look at our little yellow and red, red and green stick figures on the left. In that model, which is any market, where is price going to spend most of its time? In the middle, right? In the middle. Yeah. So most of the time, there's not going to be action to take, but we want to be ready because when price gets out of that middle, yeah, we want to be absolutely ready for sure. Mark, yeah, I see your question up there about the screener. Yeah, that's where it's offered. Yeah. Okay, let's go back to the charts. And I thought we did look at gold. We spent a decent amount of time on gold, so maybe let's look at a different market. Anyone want to look at a market that we didn't look at yet? RTY, all right. I like RTY. RTY is great. Not much going on again today because we are obviously in the middle. But when we look at the 4-hour chart, here's the levels that we've been going off of the last few days. It's this supply zone up here at 1430, demand zone 1384. Both are gray boxes because they're within the middle. So just got to be a little careful, maybe lower probability. Having said that, the big quality fresh levels, see how that's a yellow box? Because that is outside of the middle. Make sense? Okay. So there you go on the Russell. Let's also go to the 15-minute chart for a minute. I thought there was a level sitting up here. There it is. For those who watch the Russell, you also might want to pay attention to the 1449 to 1455. Okay? All right. Yeah, so you have my email, and then someone was asking about that, the website, the screener and all that. I can put that in the chat there. There it is. There's the link. You can always just click on that link if you want to. And all the stuff I do is there. These sessions are meant to help you, get to the next level if we can. Again, the focus is just pure supply and demand. And if you have any questions, you can always reach out, let me know. I put my email up in the chat. And then, of course, there's the website. All right, so hopefully some light bulbs went off and we made progress. And again, if you have any questions, just let me know. Always great to be with you and FX Street. Have a great day, everyone.